We have Ravi Jakhar. Thank you so much, sir, for waiting very patiently. Chief Strategy Officer at Allcargo Group, to talk to us about Q2 numbers and how H1 is really playing out. So talk us through what's happening with that margin shrink that's happened, around 50 bips or thereabouts. And where are you expecting it to go for full year FY25?
Yeah, it's a pleasure to be on your show. I think, I've spoken about this in the past as well. In our business, there's a large component of ocean freight, which is a pass-through from revenue down to cost. And therefore, gross margin in percentage terms is perhaps not the most ideal indicator for the business performance. And one should focus on the absolute bottom line and the EBITDA per CBM, or, the gross profit per TEU or the cubic meter in the international business. So that's the first point. Secondly, let me quickly reflect back upon, like you said, this quarter gone by and the last 6 months. What has fundamentally changed in the three businesses that we operate? On the international supply chain, the past year gone by was about downward trends in trade and tough macroeconomic environment. But the quarter that we have just concluded in September has been a contrarian trend. We have seen our highest ever volumes for the month during this quarter in the international supply chain business. The LCL business has grown almost 5 to 6% over last year, as well as sequentially. FCL business has also grown 5 to 7% over the year. And in the air business, the growth is almost 14%, which is, of course, on a smaller base. So basically, we are finding that there's a renewed momentum in trade. And at the same time, our specific initiatives have allowed us to continue to expand market share. On the international business in particular, the quarter gone by saw multiple events which played out. We had been talking about our strategy for investing in people. This was the quarter when we appointed an entire new leadership team in Argentina, Paraguay, and Uruguay. This was the quarter when we brought in some leadership team members on the procurement side in Asia and a few more growth opportunities as well. So those things played out. Our joint venture in Colombia and Ecuador was also completed during this quarter. So a lot of positives on the international business from a company-specific point of view, and structurally, the trade seems to be having a relatively positive outlook, given that the rate cuts have lowered the inflation in Europe. We believe that with the change in geopolitical situation, there could be an economic revival.
Right.
Overall, if you look at the performance, on the bottom line,
Right.
the international business, which is an EQ worldwide, is almost up by 56% year on year for the quarter.
Got that, Mr. Jakhar. Good morning, sir, and thank you so much for joining us today. It's Puneet joining us as well. Now, you had, of course, mentioned the big restructuring process the last time we spoke. Now, that's expected to come in, is the timeline that you mentioned was January 2025. Does that still stand?
Yeah, so we had indicated the first quarter of 2025, and I'm glad that things have now moved forward from the last time we spoke. We got the NOC from exchanges. The process is now already gone into NCLT, and we believe that should be completed around, maybe around April 25 is the estimated timeline, maybe a month out from the initial timeline of March, but it's progressing well. So that restructuring is also going on well. And in fact, this quarter saw significant changes in moving forward on the process as well. And it's been a good performance on the domestic side as well.
Just wanted to understand, so I think post-restructuring, you are expected to have the express business as well as the contract logistics business in Allcargo Logistics. So just wanted to talk about this business as well, because, in this particular quarter, we've seen the volume dip slightly, roughly about 317,000 million tons to 333 for the express logistics business. Just talk us through, because, it's a very big quarter for Q2 specifically, leading into, the festive season where we see e-commerce and other businesses take off very well. What's the outlook for this business? Because eventually this will be one of the major business and revenue contributors in the listed entity as well.
No, you're absolutely right. The domestic business of express and contract logistics would come together in the new listed structure as a separate independent listed company. On the express business, so we have in fact seen strong momentum. For the month of October, we have already updated the monthly numbers, and October saw the highest ever revenue and volumes for the company. So this business is also seeing a significant positive momentum. And if you look at the last 2-3 quarters sequentially as well, both volumes as well as the gross profits have improved on the express business. On the contract logistics business in particular, we have seen significant opportunities, particularly with the advent of e-commerce and our penetration in quick commerce. This, if you recall, a couple of years ago, or rather 3-4 years ago, was a company entirely focused on chemical contract logistics. And now we are so well diversified that chemical is only about 35%. And the biggest sector for us is e-commerce. In this business, we have grown almost 46% year on year, which is a phenomenal growth. And we do not see it as an aberration. In fact, that's been the trend over the last 2 quarters. And we believe this trend to continue. This is coming on the back of our significant penetration in quick commerce and also the expansion in auto engineering goods, which is an important sector for the company. So both express and contract logistics are actually having a positive momentum as well in the business.
Mr. Jakhar, just one quick question, if possible, a 30-second answer. I just wanted to understand for guidance for this particular segment, you did about 12 lakh, roughly 12.49 lakh million ton of volume last year. Will you be crossing that by roughly 5 to 10% in terms of volume, and will that transfer to revenue as well? That kind of guidance, is that a safe assumption to make?
So basically, on the express business, I would say we would gain market share, which means that we would outgrow the business growth that we witnessed by the industry. Last year, the growth was in a single digit, but we expect the growth to rebound to double digit on the market side, and we would outgrow that, gaining market share. That's all I can speak on the forward guidance on express business.
Thank you so much, Mr. Jakhar. It's been a pleasure having you and getting all of that perspective. Longer chat definitely warranted, but thanks so much for coming in and speaking with us.